And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story, real talk about money, markets, life. Now, it's The Real Investment Show, presented by RIA Advisors.
And good morning. Welcome to The Real Investment Show. I'm Rich Rosso here with Danny Ratliff, Certified Financial Planners Squared. We're so glad you're with us today. Weekend coming up. Maybe a cool front. I like walking outside and the mosquitoes are wearing Halloween masks. So, you know how you know you're too old to trick or treat?
How do you know you're too old to trick or treat, Richard?
Well, at the end of the night, you have a bag full of restraining orders. That's how you know. I got a whole bunch of them today. You have to have a kid chew on the candy for you.
Yeah, a tester.
Yeah. All the open stuff. Well, market's opening higher today. We've got futures up. Dow futures of 111. S&P futures are up today. I don't know, Danny. Seems like we're sort of stuck. Sort of in this grind. Can't break to new highs. Seems like everybody's waiting to see what happens. And I've noticed a small shift to value from growth. Maybe tech cooling down a little bit. We'll see what happens.
Well, it seems to be the hot news of the moment, at least. We're in that sense of purgatory, and now tech is, as the headline I'm looking at now says, winter is coming. And it seems to be that's the more prevalent talk now that, maybe tech valuations have ran up so quickly and so much compared to the broad market. I mean, we do have a big disconnect between not only Wall Street and Main Street, but Wall Street and Wall Street, where it seems like Silicon Valley or those tech companies are doing much better than anybody else. So we'll see how this turns out. But it seems to be that people's eyes are opening a little bit to maybe where things are and where things may be going.
I think also we're trying to place into bets maybe a Biden win. Maybe tech wouldn't be, hedge your bet. We don't really know, right?
Well,
so it's a hedge your bet. You see some of the more value-oriented stocks moving. Some of the profits, people have some capital gains, tax loss harvesting, a lot of that stuff going on right now. So I think it's going to be sort of a grind until we get through the election. Obviously, Intel came out, didn't have very good earnings. Chipotle came out. Their shares fell more than 4.5%. So operating margins were down, but they had been performing very well. Listen, without a form of fiscal stimulus, we're going to have a problem. We're going to need some more stimulus coming, no matter who wins. And that's going to be something we need to see what happens with.
Yeah, any bet for the service industry, restaurants, anything in that nature is going to have to be for the future, not for right now or what we've been through, because we're going to have that belief that we are opening back up. Things are going to improve. This is the worst that it's going to get. Yeah. And it could be that, as we're seeing numbers that are looking like they're spiking again, we may be in it for a little bit longer. And then determining how this plays out with the winter months. And I know everybody's concerned with flu season was one of the bigger things that hopefully you could nick this thing before you get into the fall. Who knows what this whole thing looks like?
I don't hear much about the flu. Have you heard anything about the flu?
I hear about the flu in the aspect that it may be tough to differentiate the two without rapid testing. And I think there's more. I think there's just that stress or the fear around all these things occurring at once.
I agree. You'll also have a sense of inertia, I think, from investors because everybody's going to be very emotional because of the election, and they're going to take it out on their portfolios. Please don't do that. Don't make a knee-jerk reaction. So that's why we have coming up, if I ever get my voice back, tomorrow with Lance Roberts, our Candid Coffee from 8 to 9 a.m. It's policies, not politics. Listen, Lance is going to wow you, Mr. Cobra Kai, with his charts, just to give you some perspective of what happens with Congress. If this happens with the presidency, what does it mean for your money? We've got a lot of people signed up for this, but there's still room. You can register at realinvestmentadvice.com. And again, I think you'll get a lot from it for just an hour in the morning from 8 to 9 a.m., don't you, Danny? Because I think Lance will give you the unemotional perspective, plus what we're thinking. So this is a little bit different Candid Coffee for us, where we're straying a little bit from personal finance, even though we do take questions on investments, where we want to give you more of the perspective on the election. And we've been writing a lot about it on the blog as well.
Yeah, I think that perspective is going to be crucial right now when there's so many differing opinions right now. And here's the thing I think we must remember, Richard, is that right now with so many different outlets and people that can put their opinion out there, that we have to remember that much of that is just that. It's an opinion.
Absolutely.
Everybody's an expert when you have a Twitter handle and you have a Facebook and all these different avenues to get out there and speak to the masses. And so we have to take this stuff with a grain of salt. And remember that at the end of the day, markets are markets. Yes, there's emotion tied in that because, the human element that we all invest in how we react to things we do. Mm-hmm. But we also need to put that in context and remember, at the end of the day, it's not going to be necessarily how we feel. And so I hear a lot of times that somebody says, well, if my candidate loses, here's what we're going to do.
Yeah.
Well, if your candidate loses, more than half of the country feels a different way typically. So maybe that's not going to be the end-all, be-all for markets. And markets will continue to evolve and adapt, and they're more resilient than I think we give it credit for.
You got to remember your investments, to Danny's point, it's a very good point, do not revolve around you. Your financial plan does because it's personalized for your rate of return. But the investments are going to do what they're going to do, regardless of your personal emotional opinion. And you can be right, but most likely you're going to miss out and try to time this inappropriately based on emotion. Same thing we see with Social Security, Danny, right? Why people take it early sometimes, or there's an emotional bias. So you got to step back. Look at the odds, look at the probabilities, look at what we're going to show you tomorrow and what we're writing right now to keep a good handle on things. And when we get back, we got a lot to talk about with long-term care, retirement mistakes people make here on the Real Investment Show on 700 KSEV. We'll be right back.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
Who will win the election in November? How will that decision affect your decisions for your retirement? Richard Rosso and Danny Ratliff's next Candid Coffee can answer your questions about money, retirement, risk management, and how to identify and protect your household against financial vulnerability, regardless of who's elected. Send your questions and join this live GoToWebinar event at realinvestmentadvice.com. Candid Coffee with Ratliff and Rosso at realinvestmentadvice.com.
Welcome back, everybody. What are your retirement fears in the face of COVID? Now, it would make sense intuitively if you lost your job, maybe you'd be more worried about the state of your retirement affairs or your plan. So there was a study conducted in August by Wells Fargo, for Wells Fargo by Harris, which found that 58% of workers who were affected by the pandemic say they now don't know whether or not they have enough saved for retirement. Even more so, 85% of the retirees that they polled, and again, this is something Danny and I talk about a lot, how important Social Security and Medicare will be for their retirement. Yet 3/4 of these workers, 72%, are afraid that Social Security won't be available when they retire. So these safety nets that Danny and I talk about, especially in the face of investing in variable assets and people way behind on their retirement savings and now having another disconnect when it comes to cash flow into their household, they're going to depend more on Social Security and Medicare than ever before. And again, people are afraid for Medicare and Social Security, but that Social Security won't be there, Danny. So just shows you the importance of why we talk about Social Security, why we talk about Medicare, why we follow all the studies and the trust fund.
Well, there's so many out there, I think, right now, especially if you're younger. I talk to a lot of people that say, oh, you know what, that doesn't pertain to me. I'm not worried about that, but it does. And so imagine you're a trapeze artist and you just expect there to be a net underneath you, and all of a sudden it's gone. And I think that, there's some really good points surrounding this. And so if we really think this is going to be gone, number one, I don't think it will be, because we know right now that 62% of retirees rely on Social Security for more than half their retirement income. It's not possible for it to just disappear. There's going to have to be some element of it there. Now, can it change? Absolutely. Which is why we feel strongly that you need to be building your own safety net. You need to be weaving that thing right now. And so I think that's what's really important. So that way you don't have to be relying on the government or anybody else for that matter to make sure that you guys are safe and sound. And so, I think the biggest thing, like you mentioned, that most people are going to outlive their savings. And a very quick way to do that is to not have any other of those nets there, to not be prepared financially. And so, you get a lot of notes too, I'm sure, and it says, well, you know what? I'm not ready to retire yet. I'm not sure I need a financial plan. And I think this is a huge mistake. Mm-hmm. Because many times we wait till we get to the finish line, or we can see the light at the end of the tunnel. We say, okay, now's the time. Let's go ahead and do that plan. Well, the problem is we may lose a ton of flexibility. We may not be taking advantage of all the opportunities that you have out there from a benefits at work standpoint, from a where do you put funds now standpoint. And so, I think a crucial thing is making sure that you have many different areas to pull from as well, so you don't outlive that retirement, so you shelter funds from taxes. I mean, there's so many other elements to these things that I think that we overlook often.
No, we do. And you're talking about trapeze. It's almost like you're blind on those trapeze based on how people save for retirement. You're going to need the net.
Yeah.
In other words, you're going to fall. You need the nets. Even people who have saved for years and have good fiscal discipline, their plans work very well if these safety nets are planned for properly. Now, I'll tell you, in the study, which is interesting, people don't believe that they're going to be able to retire. I wonder how many of those people polled actually have retirement plans, or they're just assuming, like have they actually gone through a planning process and know action steps that they need to take. If this happens, what do I need to do? I'm 10 years from retirement. Maybe I need to work a couple of years longer. Do they have any kind of steps? Because if they probably had a plan, Danny, they may not feel as... Listen, nobody wants to lose their job, and I understand why you would be concerned that you might not hit your goal.
Yep.
But without that plan, you are sort of flying blind. Because you don't even know what your retirement is going to look like yet. You feel like you can't make it. You might be pleasantly surprised, and if you have action steps to get there, and to your point, Danny, you're going to have to create, not only handle the safety nets that are given you, handle those properly. You are going to need to create your own safety nets, because the variable assets of stocks and bonds over the next 10 to 12 years may not give you the tailwind to returns that you need. So you have to think outside the box on what that retirement goal is going to look like for you. That can be very disconcerting for many people.
Well,
Because they may have to reshuffle how they're thinking about things, right? Take away some of the stigmas on annuities where they might actually have to create a guaranteed income stream. They might have to look at their home that they paid for as a source of income. They might need to move, downsize, make big decisions on what they're going to do. The plan, I think, actually makes that less ominous. People, I think, were afraid of the plan like they're afraid to go to the doctor. Like,
Correct.
oh, I don't want to see what my blood test shows me, right? The best part is at least you know, and you can create a plan with a fiduciary to say, okay, well, here's how you can get here, but maybe we need to reshape this thing too. Let's take this vision and work it. You know, a good planner is almost like an artist, right? Because you have this lump of clay that is everything you've done. And we want to mold it to where you go, oh, it's not exactly what I thought, but I like it.
Yeah.
That's not all numbers. There's emotional hurdles to that. There are exercises you need to do, actions you need to take, right? It's just a soup of different things that can get thrown in there to mold this the way you need it to be. But it may not have been what you originally visioned. It doesn't mean that that's negative. Actually, it could be one of the best things you've ever done. But you need to be aware. I don't know how many of these people have actually had plans done.
No, and that's the thing. I think that studies show that when you actually do a plan, you're a lot more confident in your future because you understand what you need to do to get there. So similar like the blood work, it's like if we expected just like, you know what, I'll start taking care of myself in retirement. Don't worry about it. You know, think about that. Like, oh yeah, I'll start working out when I'm retired. Well, guess what? All the bad habits, all those behaviors, all those things over the years that you've done, they've built up in your body. And it's the same thing with the plan. And so it's like expecting that we're going to get there and just everything's going to be okay. Maybe it will, maybe it won't. But you need to start these things way ahead of time. And typically we're going to find you're going to be a lot more confident in retirement and knowing exactly what to do, how to do it, where to go. And so it's not just about the distribution, though. It's about accumulation. So you know that when you get to distribution phase, you can do so efficiently and you're going to be able to keep funds in your pocket. And that's going to be the key because some of it's not just about what you make in the market, it's about what you keep in your pocket. And that is going to be huge, especially with what we're likely going to see regardless of who's president. Okay, we get to pass November 3rd. We're going to see higher taxes at some point. Maybe not immediately with either candidate for that matter.
May not be this administration, might be the next one.
That's right.
But you have to prepare for the fact with all the debt we're taking on. Not only that, we have just probably begun the fiscal stimulus because we are in the eye of this COVID storm economically. It's not over. The business devastation, the household balance sheet devastation takes time to work through. I mean, the market goes fast. It looks forward. Corporations can repair their balance sheets pretty easy. They let people go. They cut, they are more nimble than a household trying to bring in cash flow, which is the lifeblood of that household. I was thinking yesterday, this talk to a class, it's like, thankfully, retail, residential real estate, thankfully, we haven't seen any issues there. People's homes are at least holding up because that's where most people's wealth happens to be. It's not in the market. It's in their homes. So that psychologically would have been another major blow on top of all the other stuff that we've gone through. So you cannot be complacent and think that even though the market's recovered nicely, that the economy has recovered. We are still in the throes of that. And I told the client yesterday, it feels like you're in that eye of that storm and you got to go to the dirty side now and deal with that. And I think part of that, to your point, Danny, is going to be higher taxes down the road. And this is a global discussion, by the way, about more corporate tax, taxing the wealthy, whatever it is, higher payroll taxes, because more people globally are falling into poverty at a pace we haven't seen in a very long time because of this COVID. And now overseas, right, we have a second wave. We don't know exactly what that looks like, but we have a second wave going on. And they're closing again in many areas. I was reading about in Belgium, for example, they're closing cafes and businesses for a month. So we're still in some areas, we're going to close down. We really can't afford to do that.
No.
Anymore.
Well, I don't think anybody can afford to do that because I think that's a great analogy, thinking that we are in the eye of the storm. A lot of people got hit, and then you had that calmness when you're in the eye because everybody had the stimulus. You had the unemployment. And right now, we're about to find out what that really looks like if they don't do another stimulus package. Mm-hmm. And so I think that's where you get to the dirty side, or you get to you get that next wall that hits you in general. And that is what will be very telling about how we're going to respond to this and how quickly we're going to get to the other side.
Yeah, and it's not a statement or not. It's just the fact that whatever spurred the economy as a form of stimulus is waned. And now, unless we really are coming back, which it doesn't seem to be, although some numbers are encouraging,
Yeah.
but part of it is because there was stimulus. So we have to keep that in mind. Hey, we get back, we want to talk about long-term care and the cost of care in our area. All right, we'll be right back. Stay tuned.
Get daily investment news you can use, delivered at the speed of the internet. Sign up for the Real Investment Report now at realinvestmentadvice.com.
Who will win the election in November? How will that decision affect your decisions for your retirement? Richard Rosso and Danny Ratliff's next Candid Coffee can answer your questions about money, retirement, risk management, and how to identify and protect your household against financial vulnerability, regardless of who's elected. Send your questions and join this live GoToWebinar event at realinvestmentadvice.com. Candid Coffee with Ratliff and Rosso at realinvestmentadvice.com.
Brent's my straight man. All right, Brent, you know how you know you're too old to trick or treat?
How do you know you're too old to trick or treat, Richard?
When the door opens, you yell trick or, and you can't remember the rest. Here's another one.
We got a whole week of this. This is great. I was just thinking, I was like, man,
How long to Halloween?
People say, great Keith Richards mask, and you're not wearing one. Hey, listen, I wrote these myself. You can obviously tell. Okay, Brent. Sorry. Listen, I got up at 1 a.m. to write these.
Really?
Yeah, I couldn't sleep. I don't know what it is. You get nights like all of a sudden you're up and you go, forget it. It's not even worth.
Going back to bed.
No.
Yeah.
And then the dogs see you're up and the whole
yeah.
world is over. It's over. So, speaking of too old to trick or treat, 7 out of 10 people are going to require long-term care. Talk about that safety net, right, Danny? Of what people need to do to mitigate risk and activities of daily living as you live longer, things you can't do, eating, bathing, that you will need some form of coverage. Especially, I think, the dynamics of the population as we age. I think there are going to be a lot of older Americans that are going to be alone. They may not have a spouse to actually help them or to be caregivers. So Genworth does a really good job on their cost of care survey. And so you can calculate the cost of long-term care. And we use this to get a gauge on things a lot of times. And interesting was when you start looking at the numbers. So I just put in Houston. I got to put in Austin. But if you want the monthly, these are median costs, not average. A semi-private room at a nursing home facility, $7,513.
that's a ton of money.
At a month, for a month. Now, if you have an ailment, say a disease like Alzheimer's, where you can be physically healthy for a very long time. And again, that's Houston. I'm going to type in Austin here and see. But that's Houston. Private room is $8,517 a month in a nursing home facility, right? Even if you had an in-home care, a home health aide, that's $4,385 a month. So if you have, say, Alzheimer's and you're in a facility, you can be physically healthy for a very long time.
You can.
And this can rack up. And not many people are going to have the finances to do this.
And Rich, these numbers are great, but
scares me.
But I see it even worse. You know, my grandfather passed this year. He was 99. And, one common theme that we saw is that these facilities give you care, but sometimes people need more care or round-the-clock care. And so a lot of people would literally hire somebody. They'd be in a facility, yet they'd hire somebody to sit with them all day long because they're at risk of falling, risk of choking, risk of number of different issues. So those numbers, I think, are actually probably smaller. Now, not everybody can afford that, right?
Did your grandfather have long-term care insurance? Well, he self-funded.
He had long-term care insurance. He had it in a couple different ways, but and also had a pension, right?
Thanks.
So that's another
that's
kind of
helpful.
safety net that we don't see anymore.
That's where sometimes people have to realize that if they wait to take Social Security, it might really help them to cover. Like, instead of taking it early and having fun with it, I've gotten that comment. Like, I should
Enjoy it
take
while
it
I
at
can.
62 and enjoy it when I can. Well, what about when I'm paying $7,000 a month for my living expenses in a nursing home? And thankfully, I'm getting $3,200 a month to take care of some of that. Actually,
Yeah.
Austin is cheaper. Go figure. Private
Wow.
room, $7,209 a month.
Well, we talk about these numbers, and you're talking about per month. But Aegon Center for Longevity came out with a number that said almost 40% of Americans have less than $5,000 in retirement savings.
Does I mean it's not only retirement? You have to look at this long-term care component
Correct.
as well. Oh,
Well, that's
boy.
the elephant in the room. So we talk about planning and why you should plan prior to just getting to retirement, because there's many different things that we need to be considering. And this is certainly one of them. This is something that could blow up a plan. And so, like you mentioned last segment, we have to get more creative on how we look at finances and where do you pull funds from. And sometimes, you said, luckily, we're not seeing home values have not been hit. I fear that if we see rates really high, we will at some point. And maybe not.
Maybe the activity, to your point, but
Yeah.
people are still getting a chance now to refi, thank goodness.
Correct.
But people might need to actually tap their their resources through home equity conversion mortgages. I mean, again, you're going to have to really think away from some of the traditional ways you've been told to handle retirement with the long-term care adjunct. There are riders you can have added to life insurance. There's ways to tackle the long-term care elephant. And we try to go through every step possible before getting to an insurance step, right? We try to help you look at self-insuring first. It's just somewhat easier with a spouse. And if you have equity in your home, and we have other avenues, I just worry about all people that will be alone and what are they going to do unless they have enough assets, right? To not only retire, but to do this. We're going to kind of have a long-term care Candid Coffee coming up in December. We'll go through what it is, why you need to be aware of it, really give you a good feel for why you need to start looking at this. And the reason I threw some of these costs at you was really to give you a little cold water in your face on a Friday morning that, oh my gosh, and the inflation on this stuff.
Oh, it's astronomical. It's through the roof.
Right. So, and we don't know yet, Danny, one, the viability of some of the insurers. We don't have that many left that provide long-term care, right? What COVID is doing, because obviously we know that a majority of the deaths happen to be in assisted living nursing home facilities. There are early payouts on some of this insurance. I just don't know. So we have to be very aware of how the current health issues are going to affect not only the premiums, but who offers the coverage for you to mitigate the risk. But we can't ignore these things. We have to make sure that we have a strategy in place. Listen, for some people, and I'm one of those people, this is worse than thinking about dying. Those people halt about talking about life insurance because they don't want to.
Or estate planning in general, right?
I would all day long embrace that over the fact that maybe I can't function properly and I'm living through that process. That's my personal view. That has nothing to do with numbers. That is just the way I think. And
Well, because
the way
you're in control right now, and you always think you will be.
Right, and if I would rather be not here than have to worry about lingering. And I'm not saying everybody lingers. There are people that live in a lot of these assisted living. They're great. They're valuable. They're meeting with their friends. They're having dinners. But to be in that state where you're so unhealthy, but you're still alive, that you need
Correct.
care consistently, that's something that scares me. So I have long-term care coverage just in case that does happen. So that really motivated me fast. Fear can be a good motivator.
It can, but I think the biggest motivator is typically when you actually experience this, you have to help somebody, a loved one, go through,
Yes.
Trying to pay bills, navigating long-term care, or not having long-term care and seeing the type of care you actually receive. And that is typically the biggest motivator that I see where, we get a call or somebody says, you know what, I know we talked about this. This is something that needs to be addressed, needs to be done now. And, the numbers are scary. They're so daunting. I think we talk in these big, broad numbers. And so you broke that down by the month, which I think is beneficial. And that's even very scary when you start thinking about how much that is and what the average American actually has saved. But in retirement, Fidelity says that you're going to spend at least $300,000 in just your health expenses. Think about that. And then you got to tack on long-term care. Holy moly, man, this is crazy. I mean, you've got a lot of these things. And so the thing you were just getting to was the inflationary aspect on healthcare has been astronomical. And it's something that, you need to kind of move out in a plan and actually inflate that a little bit differently than what we inflate all other expenses. And what we see on the other side of this pandemic on what it may change to the inflation aspect of healthcare, that's worrisome.
Yeah, absolutely. And you don't know what's going on with the states. People say, well, I'll fall onto Medicaid. We don't know there. And people will say, well, Medicare will take care of it. Well, no,
states are in
there
trouble.
are certain conditions for long-term care for Medicare, and it only will pay for the first 20 days. And then you're pretty much on your own. So 80% of these costs for long-term care are going to fall on you and your family.
Yeah, you don't want to be on Medicaid.
No. There's a lot of good aids, Kool-Aid, Farm Aid,
Don't drink it.
but not Medicaid. Hey, we get back. We want to talk about, don't ignore these retirement mistakes here on The Real Investment Show. We'll be right back.
You're happy when I'm on my knees. One day it's fine and next is black. So if you want me off your back, well, come on and let me know. Should I stay or should I go?
Catch the best of The Real Investment Show anytime, anywhere from Stitcher Smart Radio. Download podcasts of The Real Investment Show from Stitcher.com.
Who will win the election in November? How will that decision affect your decisions for your retirement? Richard Rosso and Danny Ratliff's next Candid Coffee can answer your questions about money, retirement, risk management, and how to identify and protect your household against financial vulnerability, regardless of who's elected. Send your questions and join this live GoToWebinar event at realinvestmentadvice.com. Candid Coffee with Ratliff and Rosso at realinvestmentadvice.com.
Modern day warrior, mean stride. Today's Tom Sawyer, mean ride.
Welcome back to the Financial Fitness Friday edition of the Real Investment Show. I am Danny Ratliff here with Richard Rosso. Hope everybody's off to a fantastic Friday. So, talked a lot about long-term care, some of the issues that we're facing in the pandemic and concerns. I mean, people aren't nearly as comfortable or confident in their retirement as they once were, and albeit with good reason. We've had a lot happen here in the last 6 to 7 months, and life has changed as we know it. But I want to talk about some of the retirement mistakes people make just in general and what we can do to avoid these and some of the things, we talked about how maybe it's never too early to have a plan. I think that's always a big bonus when you can go ahead and start putting things in motion, knowing where to go. But Rich, what do you see some of the biggest issues that people face or don't face that they should?
Well, we just talked about one, is risk mitigation, right? You have built this tree of wealth and you've nurtured it over so many years. Now you're going to have to harvest the fruit. So, and you want that tree to continue to bear fruit. It's just not going to be at the same level. But you're not going to plant new trees as a retiree. You're going to the trees and you're hoping that these trees continue to prosper. Mm-hmm. So you got to look at market risk, emotional risk, health risk, long-term care risk, longevity risk. These are all the things that a plan is going to help you look at. Like what we try to do is help you minimize or work through market risk. We work with how many retirees and those ready to retire? Their biggest issue is I can't take big losses because they cannot recover from them. And not only that, they're also taking distributions from their accounts. They're no longer adding to them. So volatility is not necessarily their friend.
Correct.
So you're in that stage of life where you have all these trees you've planted. You have to nurture them now and make sure they don't die on you. and Lance is the farmer there. Although, how does he wear a Cobra Kai outfit in the field? I'm trying to figure out what he's going to be. Farmer
weird.
Roberts.
And how did he get that one in flannel? Farmer.
Oh, that reminds me tomorrow during Candid Coffee where we wear these robes. Please, powers above, put a cold front up because no matter what robe you wear, it's hot. And I will not lower the air in my house to 76 degrees. It's not happening. So
76?
You know how you know you're old?
78.
76 is cold.
Oh, yeah.
Oh, it has nothing to do with that. You know what it has to do with?
No.
Play the dollar sign.
Your type.
Well, yeah, I knew that.
That's nothing to do with the cold. It has to do with the fact that I don't want to pay for the.
My parents are in their 90s. They run their house at 80 degrees.
Of course they do.
Oh, man.
In the summertime.
Because it's you. Do you ever see older people when they're walking? It's like it's 90 and they have a sweater on.
Yeah, but your parents are also in their 90s, right?
Yeah.
Rich is not.
Yes, I am.
I mean, maybe in his soul, but
Listen.
Rich is an old soul.
No, I got an old hole in my pants and I don't want my wallet to fall through. All right, man. So it's hot. So the thing is, you have to keep in mind this risk mitigation, and one of these is this crossover risk too. What I mean is, this period of adjustment, when you walk this bridge from career and earnings to one that depends on the wealth accumulated, that could be as shaky as a rickety suspension bridge. I mean,
oh yeah,
especially for men. I notice it's a big adjustment. So if you've planned this, say you're 10 years away, but it's a little bit hazy, but you go, I have an idea of the year I want to retire. Great. As you move closer, your brain is already taking there. You see, what you tell your brain it's going to do, it doesn't know whether it's real or not. As you get closer and closer and closer, the picture becomes sharper until the day comes, you feel it in your gut. My plans have been run, and I can do this. That minimizes this mental risk of having to go through this crossover from, oh my gosh, I was making all this money, I was putting money away, now I have to depend on this money, and I'm not making any more money, and I don't feel as valuable, I don't feel social, I don't feel viable, I don't feel these things. And these plans, I had a client, ran retirement plan 7 years ago, just retired, which is great. It just came to fruition. He goes, this is right for me. October, this is right. Along the way, he actually created a family plan. Like he created these other plans, like flowchart. Like I'm going to do this with the family. He actually laid this out. I thought it was brilliant. I haven't really seen anybody do this before. Where he laid out, and I said, your brain is already taking you there. If you've laid this out on pen and paper, and he used not a computer, and he laid this all out, what he wants to do with his grandkids, where he wants to take them. He says, I'm so excited. He goes, the financial plan was fine. But this was like an emotional plan. And I don't know. It really has. I don't think he's going to have any crossover risk at all because of all these little plans that he has created. The family plan, working with society, taking my skills and applying them somewhere else. I don't know. It's maybe something for people to consider, to think about how do we spider out from the financial plan with these other types of more qualitative plans and putting them down. I just noticed how I was just impressed.
Well,
I haven't seen anybody do that.
And what I find as well, though, is going through the financial plan will help you with those qualitative things because
absolutely.
Oftentimes those qualitative things, they do require some type of money or time. And so it's very necessary to make sure that we link those things together and have those discussions. We do a lot of webinars and workshops, and a lot of times we talk about, like my kids, we practice to go play one game. but yet we typically don't ever practice the qualitative aspect of retirement. It's only the quantitative, the financials, and just going over that over and over and over again. But yet the two are so intertwined that we're really doing a disservice if we don't talk about those other things and have you mentally prepared so people don't fall into what? The black hole. And that's one thing I think the financial industry fails to address time and time again is having these discussions because they are very linked. And, we see people who are very successful in retirement. They're typically doing like your client does. They're saying, here are the things I want to do with family. Here are the things I want to do for myself. Here's what I want to do with my spouse. Here's what I want to do to help the world or help different areas. And I think that this is so crucial to have that understanding prior to getting into retirement. So you don't walk in and say, all right, what next? What am I going to do? And a lot of people do that. And unfortunately right now, a lot of people have done that where they didn't have that opportunity to think through things or to actually put that plan in motion or in place. They just got shown the door. And now you're really out there kind of reeling, thinking, oh my goodness, what's next? And so if that's you, this could be something you could begin to think about on how you're going to spend your time, this may be a little bit more fruitful for yourself and prepare for, like you say, the next iteration of you, because you have a blank canvas and maybe it's just for a moment and you're going to go back to work. Or maybe it is a little bit longer term, but you can begin to start thinking about these things on, how do I want to spend my time right now?
But you said something very important, Danny, and he said it too. If it weren't for doing the financial plan first, where I'm laying out these benchmarks I want to strive for, if I didn't at least create that plan first, I would have never been able to go through these needs, these wants, these wishes that I have, and then come up with a workable personal plan. That financial plan allowed him to then fuel and spin off these others. Mm-hmm. I don't think he would have done these others without the plan, to your point, first. It inspired him to paint a deeper picture than the plan did. And I think that's one of the beauties, or it's like a fractal of that plan. And you will, again, it's not something to avoid. And this is the thing about one of the retirement mistakes I think you make, or people make, we all make, is when you hear wealth management, it's always about the portfolio. It always comes down to product and portfolio. And that's where the industry takes it. That's where brokers take it generally. But that's really not the case.
Well, the plan's not sexy. It doesn't sell, right?
Right.
Unless it's designed to. But that is a big issue.
Yep.
The financial world wants you to think about the investing and, look at your buddy from high school who's on that yacht or his private jet. And we know that, that exists. But that's few and far between. That's not the average.
Could someone direct me?
There's one guy.
There's one guy.
Yeah. That one guy.
Connie doesn't let you take vacation around here. How am I going to get on a yacht? I always say that about Connie. Doesn't let anybody take vacation.
Telecommute.
Oh. I can buy one of those visual head things.
Yes.
Do you ever see those?
Yes.
I can be on a yacht just by buying those.
We'll call it Rosso VR.
All right, so you got to do the plan, right? That's going to lay it out. Also, you can't say no to family. We are seeing this now during the pandemic. We have more younger people living at home than ever. And I'm not saying I would kick my daughter out. If she wanted to come live back home, I'd be happy with it. I'd be fine. I'm selfish that way. I always love her around.
She'd be paying bills and rent.
She would. She better not touch the air conditioner. When she touch, I know when she's touching the air conditioner, when it's down to 72. Dad, it's 72. It's okay. No.
There would be this constant fight in the Rosso
That is the
household.
one luxury that we allow ourselves at our house. I do without a lot of stuff, but I got the thermostat set on hang meat.
What do you want, 65 at your house?
Well, 68. Yeah.
So let me ask you a question, because I don't know. Because if my air conditioner is running too much, I'm pushing it up, right? So is that, the wear and tear on the AC, do you have to get it maintenance more?
Well, we just replaced them. So
So you replace them every year?
No.
The way you're going?
No.
Oh, okay.
No.
Every year. Man.
The house is 17 years old. No, 20 years old.
So you only replaced it 4 times?
And we just replaced both of them. So
okay. All right. I'm just kidding.
So we're good.
I'm not coming over your house without a shawl. So the financial support to family and friends, you got to prioritize that and learn the magic word sometimes. No. set your boundaries. You can help on a time. You can place it into your household budget. But remember, no one is going to subsidize your retirement. No one else is going to pay for it but you. All right, tomorrow, Candid Coffee. We'll be back next week. Really loved you being here. Hope you have a good weekend. You've been listening to The Real Investment Show. Thanks, everyone. Have a good weekend.
Money, must be funny in a rich man's world. Money, always sunny in a rich man's world. All the things I can do.
Get daily investment news you can use, delivered at the speed of the internet. Sign up for the Real Investment Report now at realinvestmentadvice.com.
It's a rich man's world.